What I want to do is just introduce myself and Vicky, and then Crimson, and then I won't steal David's limelight, but I'll pass you over to him to introduce himself as well. So, yeah, so introduce myself. I'm Chris Butler. I've worked at Crimson nearly 11 years now, and I head up our senior appointments practice here at Crimson. So very much specialising in the C-suite kind of area and above. The reason that the event Crimson Communities, we wanted to bring, especially with the current global kind of pandemic that we're in, wanted to bring people together in a way to talk about topics that are kind of key in the market. And I think this one is definitely something that's been around for a while, but is accelerating because of the digital world that we live in. And also we've got on the call Vicky, who is part of the senior appointments practice. Vicky, do you want to introduce yourself?
Hiya, yeah, so I'm Vicky Smith. So I've been at Crimson almost 5 years now, feels a lot longer. So I started off in the contract consultant team, doing the fulfillment and worked my way up to 360 recruitment. And then recently, at the start of this year, I have now joined Chris into the senior appointments practice here at Crimson, where I'm the researcher, so helping Chris along with other clients as well, specialising in that sourcing.
And then if we just go on to the next slide on the PowerPoint, it will give you an overview of who we are. So quick introduction into Crimson. We were established in 2001 as a private business. We 3 years ago were acquired by the Harvey Nash group of organisations. So we're now part of a £1 billion turnover global entity. So we, as Crimson, two distinct sides to our business: IT recruitment business, which is where myself and Vicky sit, but we've also got an IT solutions business that are a Microsoft Gold partner. So really a reseller of Microsoft products across the whole of the landscape. So Dynamics 365, SharePoint, Azure. So it gives us a really good blend into the market and a good view of kind of what's going on in the outsource world to what's going in the job market as well. So without further ado, I'm going to stop talking and not, so you don't have to hear my brummy tone.
Just before,
and I'm going
to
yeah, go on.
Pass on to David, just to let everyone know, we are recording this session because we like to, obviously, people who haven't been able to make it, put that onto our YouTube and onto our social media. So that's just a bit of a heads up to everyone as well.
Right, and what? Now I can do it. Now I'm going to pass you over to David, and David can introduce himself and take over.
Great, thanks guys, and thanks very much for giving me the opportunity to come and present on the community. I've attended a few in the past already, and they're really good interactive events, and I hope today's event is just going to be interactive in the same way. So the presentation is how do you build a digital bank? And just to give myself an introduction, I was the former CIO at Liquid. This was a fintech startup based in London, and our objective was to build a new UK retail bank. It was going to be in technology parlance, it's going to be a cloud native bank, and our objective was to build something that would allow people to reconnect with people. The vision from the founder was that despite being digitally connected, we are more disconnected than ever. And that was part of our proposition, not only within the, the technology, but also there was an aspiration in the future to develop branches or some form of high street presence as well. Prior to Liquid, I was at HSBC for many years, working in London, Brazil, Mexico, and India, and working on a number of projects, mainly in the technology space, DevOps and Agile, scaling up technology centers, but also I had a great period working on mergers and acquisitions where I was able to get a real insight into not only the workings of technology, but also how technology can power a financial organization the size of HSBC. So today's purpose of the webinar is three things really. First of all, I wanted to share my experience of building a digital bank. We often talk about digital transformation, and many organizations are going through that journey today, but we don't talk about building things from scratch. And I think it's quite a unique thing, particularly in finance, to build something from the ground up. Of course, there are many examples of that today, whether you're looking at the challenger banks, the Monzo, Starling, Revolut, etc., and also many technology companies that are coming about providing technology services for financial technology and also regulatory technology, which we'll come to later. Secondly, if you are an existing financial services firm, then I believe that there are opportunities in this presentation for you to take away and also look at developing those within your own organisation. The ecosystem again, has opportunities in terms of biometric identification, AML, and also payment systems, to name a few. And the final one, we'll only touch on this briefly later on, but there's a trend which is coming in now called embedded finance. And embedded finance is as it says, it's basically taking financial services products and embedding those into the products of the organisation themselves. The example that, the example that most people use today is in Uber. So, for example, when you step out of an Uber, you don't go to the guy and hand in some cash or a payment card. It's all done seamlessly within the application itself. And we'll look at a couple of examples of that later in the presentation. So what are we hearing about today? So first of all, the road to authorization. This is really a summary on the regulatory barriers that any new organisation will face, or any new bank, in becoming a regulated entity. The second one is looking at the digital banking component. So, how is fintech powering the new customer journey, and what are the opportunities within existing firms to use fintech, and also regtech, which is regulatory technology in their organisations today. And the third part, we're going to look into technology. Often, you'll hear terminologies within technology about cloud native. You'll hear agile and DevOps and other parts, and we'll touch on some of those elements in this presentation today. Hopefully not too deeper getting into technology, which is my subject matter expertise. So let's look at the background. So if you look at obviously new banks have been coming and going for decades, but if you look at the current wave of new banks or digital banks, this can be traced back to 2013. And at that time, the FCA and the PRA, they introduced regulatory reform, which would enable new banks to come to market quicker through a streamlined authorization process. And this process meant that you could actually become authorized earlier than a regular bank, albeit with the same regulatory conditions. And this meant that you could come to market quicker and also get your products out, and also make sure that you had more investment opportunities with the confidence that you were a fully licensed organization. The second thing that came along was the unbundling of financial services technology. So, for example, as we mentioned previously, biometric identification, products for AML, core banking, etc. And then finally, the availability of public cloud. So any new organization could actually have enterprise-grade infrastructure available to them at pretty much the touch of a button, and that enabled them to get to time to market a lot quicker. And all of these came together to produce a wave of new banks, often called challenger banks or neobanks. So what does the bank look like today? So of course, many banks have partnerships and vendors, but typically a new digital bank ecosystem will look something like this. So effectively, on the right-hand side, you have the actual partnerships. So this could be biometric identification partnerships, anti-money laundering, credit scoring, etc. And these are often connected with an application programming interface. And the API is a standard way of technology components talking to each other. And then within your bank itself, you may have products like loans, savings, or current accounts. And obviously that's underpinned by the bank license, which we'll come to later. And then the difference here is that in terms of infrastructure, a lot of these are based on public cloud. So whilst any existing bank today may have their own data centers, a lot of new banks typically won't have their own data centers. They'll be relying on services potentially from Amazon or Google or Microsoft. The good thing here is that these capabilities allow you to scale as you grow. They allow you to focus on your core capabilities of a bank as well and not have to worry more about the technology. And it means that you can get started up a lot quicker. And as I said, time to market, particularly when you're in startup, is one of the most important things that you have. And that distribution, minimizing that time is critical for anyone that's coming into a banking themselves. So let's take a look quickly at the banking license. So when we talk about banking license, and of course I'm going to talk about banking license throughout this presentation, actually there isn't a banking license as such. It is in fact an authorization, and the FCA handbook has put this as a Part 4A permission to carry out regulated activity. It's quite a long paragraph, but essentially that's what you are striving for if you're going for a full banking license. Now, As we said, that it can be a long, drawn-out process. In many cases, it could take maybe 2 years or 3 years once you get through the whole authorization process to actually become a bank itself. During that process, actually, you cannot call yourself a bank until you're actually licensed. So if your branding is called new bank, you can only call yourself new until you actually have the authorization. So what are the alternatives? Well, first of all, there's what's called an e-money license. Now, an e-money license can make payments. They can store money within wallets. It requires less capital to get on the road. And also it can be quicker time to market as well. So it can take months rather than years. The only challenge with an e-money license is that you can't actually invest the money coming into the organization. So, that money is effectively sitting there, not doing anything. And that can cost you, obviously, from a liquidity perspective, a capital perspective as well. The next two options here, which is AISP and PISP, these are relating mainly to terminology around open banking. So an account information service provider, again, this is a separate type of authorization. They can retrieve account information. They can't actually make any payments. They can just take information. And if you look here, for example, you could have what's called an account aggregation application, and that takes information from maybe you have 2 bank accounts, and it takes those into a single app so you can get a single view of your accounts. It can also be used for budgeting. There's firms coming along now which is using artificial intelligence to help you with your budgets and the management of your financial services. The next one is PISP, which is Payment Initiation Service Provider. And PISP is a slightly different one. It can exchange information, but it can also make payments as well. So, for example, peer-to-peer money transfers. So, in this case, again, taking the example here where you have 2 banks, you could actually use a PISP in order to transfer money between 2 banks as well. And that kind of thing is happening more and more under the banner of open banking. And you'll find a lot of companies now that are coming together to make standalone products to enable either the sharing of information between banks or the sharing of payments between banks as well and other firms. So for the purposes of this presentation, we're just going to focus on the bank license, not these other options here. But if you are looking at other options, then I'm happy to provide further information on those as well. So when you want to become a bank, I mean, how do you start? Well, luckily the FCA and the PRA have created what's called the New Bank Startup Unit. And this was part of the actions that came out of the review in 2013. And the newly streamlined process is effectively called authorization with restriction. So again, you can become a licensed bank a lot quicker, but you can only limit deposits up to £50,000. So you cannot take anything more than that within your organization. Full regulatory standards apply. And also, once you enter the AWR period, or mobilization as it's called, you then have effectively 12 months to get into what's called variation of provisions. And at that point, you then become a fully fledged bank, assuming you've met all the conditions that the FCA and the PRA have applied. And again, this is a very good option. And what you'll find is that many of the new banks today went through the AWR period because, you know, as I said, you can get the, it gives confidence to investors that you are an authorized institution. Many people, you know, from a staff perspective, you may not want to take the risk of going into a startup. This gives added confidence that the bank is actually going in the right direction. And also it just means that, you know, from a customer standpoint, you can get your products out sooner and start, you know, taking feedback from the customer and amending those products in a way that you need to. So in order to get to that stage, you have what's called the regulatory business plan. This is quite a hefty document. I did have a picture, but I've misplaced it, unfortunately, but it's around 800 pages. And effectively, you know, it's going to contain things like your business model, products and distribution. So are you looking at primarily just a mobile bank? Do you intend to have branches? You know, do you intend to have other ways of distributing your product? What are the financial resources? So, for example, where does the money come from? If you're taking overseas investment for your bank, there'll be additional scrutiny on those kind of investments. But also, you know, the FCA and the PRA want to minimise risk to the customer and also to the financial services industry itself. How do you plan to make money? What is your customer journey? So, for example, including things like the complaint handling process, pricing and onboarding arrangements, and finally, technology and operations. So what is your technology going to look like within the organization itself? And these are just 6 things. There's a list of about 20 items that you need to produce in order to get through that process. And effectively, you need to demonstrate your business will be viable and profitable. And, as part of the competition, the FCA don't want to put a bank in the market that's doing exactly the same thing as someone else. There needs to stimulate competition with other existing players in the market. So how much money do you need? Well, I'm often being asked by many people, what is the amount of capital you need in order to build a bank? So there's 3 areas that you need to focus on. First of all, you need the money to build a bank. So, money to bring the staff in, money to go through all the compliance activities, the technology, a whole host of things that are required to get the bank operational. And then once the bank is authorised and you do operate and you do become a licensed financial institution, you need the money to operate the bank as well. But then there's a third element, and that is the minimum capital requirement. So any bank that lends money and has a full banking licence has to meet a minimum of 8% capital. And the complex modelling for capital is beyond the scope of this presentation today, and also beyond the scope of my expertise. However, I've put together a very oversimplified calculation. So the way it works is that if you, for example, are a bank and you lend £70,000, and this is clearly a very small bank, you have to hold back some money which effectively backs those loans. And this is aimed at making sure that there is stability in the financial system, but also it promotes good governance within the organisation today. So the way it works is that you have a weight, and that weight is set by the regulators based on a number of criteria. In this case, we've taken 80%. There are different weights for loans depending on the loan to value. Sorry, that's on the mortgage. Sorry, there's different weights on that depending on the loan to value. And this weight effectively creates is what creates the risk-weighted asset. So in this case of a loan, it's 80%. So the risk weighting is £16,000. From a mortgage perspective, the weight is £25,000, and that's a total of £41,000 of risk-weighted assets within that firm. You then take 8% of that total, and that leaves a number of 3,280. So for a bank of this size, again, a very small bank, it's lent £70,000. But actually, within the bank itself, it needs to ensure it has £3,280 at all times in order to back those lending products. And just an order of magnitude, and again, this is clearly not comparing like for like. HSBC's risk-weighted assets in March 2020 was £857 billion, and their 8% capital requirement was £68 billion. And if you look at Monzo's risk-weighted assets in 2020, their risk-weighted assets were 157 million, and their 8% capital requirements was. So this is a lot of money to keep back within the firm, and again, that money cannot be lent to people, and it's got various constraints around what you can actually do with that. So capital remains the biggest barrier to entry, and as I said before, not only do you need to find the money to build the bank and operate the bank, you need to find the money to capitalise the bank as well. So that's the first section done. So obviously we looked at the banking licence and alternatives, the newly streamlined authorisation process, the regulatory business plan, and the capital requirements. And I'll pause briefly if there's any questions coming through before we go to the next section.
David, I just wanted to ask, so you've worked in both the corporate bank world and also a startup bank. What has this kind of challenger bank type environment done to the big corporates? Did it wake them up a little bit more than what they were previously? Because actually the people are accelerating how to build a bank and actually offering different types of stuff the way the world. So did it kind of shake the banking sector to kind of really wake up and go, actually, we need to modernise?
Yes, I believe it has.
Okay.
I mean, primarily the modernisation has taken place on the customer side initially. So if you look at a number of products now, which have been released under the digital umbrella in most banks, things like the onboarding process now is becoming more streamlined. If you look at the mobile apps, for many banks, and you go back to maybe 3 or 4 years, they've changed completely, and they offer a lot more services. The information that you can now, the actual capabilities of the mobile app have now changed. And so, yes, I think they have woken up banks, and they still continue to do so. I think the area that still has to change is really within inside the organisations, because a lot of these new banks have slightly different operating models. The way that they, as we'll find out later, the way they deliver their technology is different, and also the components are different as well. But essentially, I think the challengers have challenged, and it's been received, but it's still a long way to go.
Yeah, because I'm guessing from a large corporate bank, they've had to speed up their services to market, because actually, if you're a nimble startup organisation, it's easier to get technology out there. Whereas actually, if you're a big global bank, previously it's been hot. It's taken time to get products out to the market. Whereas I suppose this has just sped up that process for both parties, really. And for a consumer, that's what you want, really, isn't it? You want something that's hot, and you want a service that you can get hold of today, not in a roadmap in 2 years' time, really.
Yeah, and one example actually I like to use is with Starling Bank. So during the lockdown, they quickly released a new product, which was issuing a second debit card onto a person's account, and it had a limited authorization up to, I think it was £100. But if you were self-isolating, you could give that card to a friend or someone to actually go and buy your groceries. And the card was restricting, certain, you could only use it once, I think, and there were certain restrictions. But essentially, getting that new product to market in such a short space of time was an example of how new banks are, for want of a better word, challenging the existing marketplace.
Yeah, and then you don't have to. You're basically not chasing family members down for the money they owe you for your weekly shop that you've had to do. Thank you.
And trying to get someone to work on contactless as well, who doesn't know. Okay, so let's move on to the digital banking component. So as we spoke about before, there is an ecosystem now developing around fintech and regtech, so financial technology and regulatory technology. So you have areas like biometric identification. If you're onboarding onto one of these new accounts, you'll go through the selfie identification. Anti-money laundering now is being undertaken by new financial firms. Core banking, as we'll come to later, is now coming out of more updated and technologically advanced offerings. And also, don't forget, pensions and digital banks are also part of this ecosystem as well. So, you have companies now that are issuing or consolidating pensions under one app. But essentially, if you're a digital bank, you may have money coming into your account, and you could work with a pensions provider through the bank for a partnership, potentially to transfer money into that pension over a period of time. And also the same with investments as well. So, maybe over time, people are moving away from savings and they're thinking, actually, I'd rather go straight to an investment opportunity. Digital banks will then come in to partner with an investment firm. They will create all the underlying, plumbing and infrastructure between those companies. And effectively, again, from your digital bank, you can then go straight into an investment opportunity. And more of these marketplaces are being created within a lot of the new banks today. So let's take a look at how the customer journey could look in a modern bank. So we'll take here an example of a loan application. So assuming you've got the app downloaded onto your smartphone, effectively the first point is to register onto the app. This would be via your mobile phone number or your email, and then you come into identify the customer or KYC, know your customer. So these are typically real-time verifications on the smartphone. It could take a selfie with a photo, although some people are moving away from that now into what's called a liveness detection. So they may actually have a video or short video of yourself saying something or moving, just to ensure you are the actual person there. And finally, this will be matched with a government issued document. So obviously in the UK, that would be something like a driver's license or a passport. And this can literally take seconds to do. If there's any delay within that process and there's some kind of query around, is that person linked to the document, you would still continue with the customer journey, and there may be a slight delay later within that process in order to confirm who you are. But effectively, it is proper KYC, and obviously that's required under regulations as well. We're not going to go into fraud checks, but again, opportunities in there with the fintech and regtech ecosystem to look at fraud. And then we come on to anti-money laundering checks. So a lot of companies now are bringing together a proposition which uses AI. So whilst they are using the same sanctions lists, the same PEPs list and watch list as any other bank, there's no difference. They are actually using AI to bring in alternative sources of information to enrich that data as well. So, for example, if an individual is onboarded and maybe they're on a list, you may want to complement that with some further data from maybe from media or other sources of information, or alternatively, there could be someone in the media who is actually maybe he's been labelled as a criminal or something, and you may actually think, well, actually, it's not actually made the list yet, but I'd like to be notified about that person so I can maybe do some additional due diligence if necessary within the firm as well. And this AI enables you to bring that enriched information, for all customers, but also it helps with risk automation as well. So trying to cut down on one of the biggest challenges within AML is false positives, and this helps to reduce false positives, but also, as I say, automate your risk as well. And there's also, if there is a problem, then of course that will notify the compliance team and other areas of the organisation within the firm as well. We won't touch on credit score at the moment, but then we'll come to the final piece, which is to approve the loan. And effectively what you have here is a reduction in onboarding. You have within minutes, time to cash in minutes, and also an increase in revenue. If you're someone that is, and we're seeing this obviously a lot at the moment, where people are having to borrow money for certain reasons, whether it's a person or a business, getting to that cash quickly is going to be one of your main objectives. And if you go to a bank that is enabling you to get cash quickly, like a new organisation, then of course you're going to bank with them and increase their revenue within that firm. So that's a brief overview of the customer journey. I mean, there are sometimes other steps, but I just wanted to give you a feel for how that would look within a new bank. And the next stage we look at is how payments operate. And so once that money has been approved, how do you then make a payment to that individual? Can I just if there's any questions on that? I know this is quite busy, but if there's anything, let me know. Okay. So payments and settlement. One of the challenges of building a new bank is that you don't actually have access to the payment and settlement systems. You can have access if you want, but there are some constraints. So let's look through those briefly here. If we're in the UK, we have, by example, faster payments, which is what most people on this call will probably be using faster payments to transfer money. You have CHAPS. So if you're buying or selling a property, typically you'll use CHAPS because of the high value nature. And the final one is the BACS, which always astounds me that we have a payment system that takes 3 days in this country. So effectively, you have BACS, direct credits, which transfers money from your salary, so to speak, and also the direct debit scheme as well. Now, the problem is that if you want to connect to these, and you can, it's a lot of intensive work to do that, both from an operational perspective, from technology, and also there is quite a cost in order to get in all that operational, whether it's certification within the schemes and meeting all the requirements on a day-to-day basis that they have. And again, this is going to elongate your process to actually get the bank operational. The second challenge is that you don't have access to settlement. So in order to become a member of these schemes, you typically have to have access to the Bank of England, and that is to settle, Bank of England account so that you can make settlement. And the reason I say that is if you take something like faster payments, you make a payment within the faster payment scheme and you get a message back in most cases very quickly. But actually all you're doing is transferring messages between those organizations. The actual money, the actual cash is actually settled in the case of faster payments 3 times a day. And that's done via the Bank of England settlement process. The next challenge with building a bank and accessing payments is things like, how do you get access to SWIFT network? And that's a similar problem where it's very complex to actually set up the technology and the operations. You don't have things like sanction screening, transaction monitoring. In some cases, you may be connecting into a bank or a scheme that doesn't have the latest messaging. So you may have to go into a transformation requirement for messaging. And all of these things here are going to cost you time and money, and the operational challenges to get those in place as well are far and beyond what a new bank would want to do. So what most new banks do is they take on what's called a sponsor bank. And the sponsor bank is a regular high street bank in most cases. So it could be HSBC, RBS, etc. And they provide access to the payment services. And they also provide access to the Bank of England settlement as well. So effectively your money, your actual customer makes a payment that goes through what's called a payments gateway. We'll come to that in a second, to the sponsor bank, and then off to the payments providers as well. Now, the piece in here we talked about, which is a payments gateway, is another piece of technology, as I said, that actually takes away a lot of the challenges that we faced here. So transformation, sanction screening, transaction monitoring, etc., and actually provides that on your behalf. So typically, I mean, there are payments gateways out there today, but also there's many new providers, that are providing this service. And again, this means that within the bank, you only have to do limited operations within your payments, and effectively you can outsource the rest to the payments gateway and the sponsor bank. I should point out that some of these new payment gateways today are actually providing direct access into the payment providers themselves. So they're going through all of the challenges that someone would face, but because they're providing that directly as a service, as opposed to a bank itself that would need that from a customer perspective. So as I say, it's quite a complex system here of payments and settlement that any new bank needs to put in place. And one of the most fascinating parts of this really was to understand that it's not that simple. And I think there's a lot of firms out there that are trying to simplify that on people's behalf.
So, David,
yeah,
can I ask a quick question? So, obviously, there's a heavy reliance on the sponsor bank and the connectivity it provides, like with regards to CHAPS. So, as a customer, why would I go to a new bank to provide that front end functionality as opposed to going to one of the established banks like HBSC that is providing that sponsor bank? What's the difference? Because it still feels like we're not breaking free of the old established network.
And you're quite right. I mean, this is one of the things when I first saw this, it was quite surprising that you are still within the establishment, so to speak. Yeah, I think the difference here is that the bank itself is really within their products. So if you look at a new challenger bank, the way that a current account is provided, the way that loans and savings are provided, that's the differentiator really. So if you're just a person that wants to make CHAPS payments, maybe you're an estate agent and you have a business account, potentially a bank of an established bank would work for you. But as I said, there's also firms that are now creating their own connectivity into CHAPS as a discrete offering, and you can connect those into your bank as well. But the differentiator really is that top layer. How do you access the customer, and what services do you provide to the customer? And that's where the difference lies within these. And again, this is, I mean, when we'll talk about later about embedded finance, but it's also about all of this, to be fair, is also embedded within the challenger bank itself. So you don't see this, but obviously I've described it in detail here. But really, this is the challenge for a modern firm. How do you break free of all this? You can, over time, get rid of the sponsor bank, and you can become a direct participant into these firms. And a lot of companies now are slowly, as they've matured as a challenger, a lot of these companies now are actually becoming direct participants to these systems as well. So that sponsor bank will disappear. But yeah, and also it's a big revenue driver for sponsor banks because they charge you, for the payments going through their systems as well. It's a good question. Thank you.
Hi, David. It's Dawn. That was one of my questions. Why are the sponsor banks doing this? Because it feels as though that they're providing other businesses to take their business away, really. Yeah,
I think over time they would. But again, during that time that they are providing the service, they're obviously charging you for it. So and I think going back to the early requirements of the FCA and the PRA to stimulate competition, there isn't really much option in this case. But then you could argue, well, actually, we're now a sponsor bank and we can provide these services. Why don't we provide that as a different type of service? Yeah, so maybe carve that out into a different business. And I don't want to mention any names within this presentation, but there are firms, for example, now on the payments gateway side that have direct connectivity into faster payments and CHAPS and BACS themselves. And they also have direct connectivity into the Bank of England. So in that case now, they've actually taken effectively all of this and created a proposition that allows for settlement. You see, and this is where, you know, the existing banks would need to be looking at opportunities within that space, and also other areas around payments as well. And I believe they are. It's taken more time than the fintechs are actually, you know, they're a lot quicker in this space. Yeah.
Isn't this just the case across all sectors? So lifting it up from digital banks around having it is about that customer journey, isn't it? So one of my contacts within the logistics sector, and he works for one of the big players in the market. Their biggest, I suppose, their biggest challenge and competitor in the market is these they class them as new startup logistics businesses. Yeah. But those startup businesses are just the customer focus. So they're still using the big players in the market to shift something from A to B, but they're just giving that customer that engagement, so you know exactly where your parcel is at any one time. So it's very similar to this, really, isn't it? It's the challenger banks and the fintech stuff is very much looking at the customer first, but using the big, I suppose, oil tanker background banks that do all the hard slog and stuff, really, that they've done for hundreds of years.
Yeah, and that's true in many different industries. As you said, you know, people will typically come in maybe at the bottom level, and they just have that great customer experience. And as they work up through the stack, they then start bringing on more of those components within the organisation today. I mean, I guess you could say the classic example, and this is in your case, logistics, Amazon. You know, previously they would use other companies, but then they're building their own logistics empire. So, you know, as you work your way up, you then bring more things together. But again, a lot of these are not necessarily being brought in-house. They may still use providers because, you know, if you're a bank, your capability is being a bank. Yeah, that's your core capability. I mean, obviously, part of your products is the technology, but that technology being provided by, you know, a payments gateway or a core banking provider works a lot better than you actually doing that yourself, and you can focus on the customer. Yeah, so.
Yeah, it's about knowing what you're good at, isn't it, and using the experts around you in that almost that ecosystem of the banking world to pick their brains and use what they're good at as well, isn't it, to make a full-rounded customer journey seamless, really.
Yeah.
Okay, thank you.
So the next one we'll come to is core banking. So actually, I read an interesting report yesterday on core banking. I'll come to that in a second. But many organizations today have what's called a monolith design for core banking. And this is where all of these components come as one system. They're very tightly coupled together. They're typically based on legacy technology. And in fact, the people that are supporting these are retiring or moving on from the organization. So there's a big challenge in terms of maintainability and flexibility within these systems today. There are ways of abstracting this, but I'm not going to discuss those now. But essentially, one of the areas that's now been discussed in, actually products are on the market, and they have been for some time, is a modular approach. And not only does this apply to core banking, it also applies to things like credit card systems and these big, you know, services that many banks and companies have within their estate today. So the way a modular works is that, so example here, you have payments. All of these are, I mean, it's very simple that these are all modules that come separately. So for example, if you're a bank that does loans, you may just take the loan module. You don't want savings. You may have your own general ledger. You don't need the general ledger. You may just want to do, you know, you may have payments. You may have your own customer information database. So you just take the modules you want. And the beauty of this is that these can be swapped in and out as necessary, although a provider would obviously want you to take as many modules as you can, but effectively they're more flexible, and also they help you migrate as well. So for example, within this core banking system today, if you want to migrate savings into a modular, you could say take a part of that, migrate into this new system as well. Unfortunately, one of the reports I saw yesterday was that only 45%, I think, of respondees in a survey by Capco said that they were interested in actually trying to resolve their core banking legacy systems, which is quite interesting, really, because if you can get this changed into a more modular and flexible and nimble system, it then generates more opportunities for you as a bank as well. But I guess, you know, if you're a little bit behind in terms of digital, you're going to want to focus on the customer first. And, you know, sadly, this doesn't always come into the top of the list. Typically, modular systems are based on public cloud infrastructure. and what's called and using microservices, which we'll come to later. Sorry, there was a question.
Yeah, it's for me, Dave. Just a quick one. So obviously the provider needs to have this new flexible and scalable infrastructure, but we're still dependent on the Bank of England to provide the ongoing settlement, aren't we? And the Bank of England are still quite behind. They still operate very much in the monolith. I've seen their Bank of England data strategy recently, and they're trying to move to the right or on a similar journey. So is the Bank of England holding back the delivery of the modular services?
So, I mean, I think there's the new system there is the new payments architecture, if I'm not mistaken. I think there's an element around that that's going to bring together faster payments backs and also the settlement side. I believe that's been delayed, actually. I'm not sure exactly when that was supposed to be, or actually when it's delayed to. So you're quite right. That is an issue, because even if you make payments, even if you bring this into your organisation today, the settlement side is still, is going to take some time. And this is not necessarily a knock-on effect with technology. This is going to be a knock-on effect within liquidity in the organisation as well. So you'll be having to hold more liquidity, and that costs money within a bank. So yeah, the end-to-end ecosystem is not real time, and many companies they have real-time payments, but it's real-time messages, not necessarily real-time cash. And obviously they have to put things in place within the bank in order to mitigate that, liquidity and various risk measures as well.
Thank you.
So that's the digital bank components. We looked at the ecosystem, the customer journey, access to payments, and the monolith. Core banking is breaking down the monolith. So let's dive into technology. Was there any more questions on this section? So, cloud native architecture. You may have heard these words, particularly if you're in the technology space. And cloud native is effectively, it takes full advantage of the capabilities offered by the cloud. In some cases, you'll find that firms are moving workloads into the cloud as is. They may be cloud ready, but the question is, are they taking full advantage of what the cloud has to offer? And there's 4 things to bear in mind in that example as well. So, for example, first of all is microservices, which we'll come to shortly. Automation, so trying to automate as many mundane tasks as you can, both in terms of operations and also within the system as well. Automation also refers to testing. So in the case of if you have any manual testing, the objective is to automate as much of that testing as you can. Managed services. So again, as a new bank, you want to keep your teams light. So if you can take on a managed service from a cloud provider, that will help you to get to that goal as well. And finally, DevOps practices, and we'll come to those shortly. And this is really a philosophy around how you put your teams together and how you release your code into production as well. So if we take the example from the previous slide, so we have this payments module. If we then look inside the payments module, which is obviously a very oversimplified version, we find that within a payments, you may have to check the balance, you may have to update the accounts, start an AML check, send a payment or an AML alert. And there's obviously other things as well. But effectively, each one of these are modules in themselves, and they're called microservices. And again, taking that philosophy from a modular approach, you would then have each one of these are independent, and they're typically based around a capability within the business as well. There is a famous quote from Amazon, from Jeff Bezos, which he wanted teams that were the size to be fed by 2 pizzas. And that meant that it was a smaller team that could work together just on single capabilities and deliver those products in a flexible way. The other thing about microservices is that they are typically accessed by an API. So there's no complication around accessing the information within each one of these modules. And whatever you expose in terms of data is accessed via this API here. So we go into those characteristics here briefly. So microservices, so effectively you have a check balance here. This is basic business capabilities, and they run independently. Containers are standardized units. So again, the classic example of a container is the shipping container. What it means is that once the microservice is within the container, they can be run on any system. Yeah, so they could be run on Amazon, on Google, or even within your in-house data center as well. And that standardization ensures that interoperability between those providers. They can also be replaced without disruption. So if the container is falling over for some reason, or there is some kind of system error, it's easy to spin up a new one and continue with the processing of a particular transaction. The next stage is managed services. So in this case, you want to outsource potentially some of your workload to the provider. So this could be things like backups. So you can schedule a backup through the provider. It could be security alerts within the provider as well. Now, don't forget, you're not handing control and saying that's it, it's gone. You still have full control over those, but just from a day-to-day operational perspective, the managed services provide you with another opportunity to keep your team light, but also make to use the opportunities within that particular cloud. And the final one is code deployment. So automated code deployment going into the microservice, testing automation, and DevOps practices, as we'll come to later. One of the and we'll just put the end-to-end flow here. So this is cloud native architecture. So a customer makes a payment, they check a balance, it updates the account, starts an AML check. Maybe that goes off to one of the partnerships we talked about within the ecosystem for anti-money laundering. And if there's an alert, then your compliance team could be notified depending on how that is set up. And finally, you would come down here to send the payment and then off to the payments gateway that we discussed earlier on. So that's how a cloud native architecture and this modular approach works together. So any questions on that? Okay. We'll just touch on these briefly. Cybersecurity is a big concern for many organizations today. One of the things that you will learn as you come into the cloud environment is what's called the shared responsibility model. So this is from the AWS shared responsibility model. Each one of the main providers has their own. But in effect, you have this bottom piece here. And this is what you would probably know within your existing data center today, if you have one within your organization, that you're responsible for securing and building the networking, the storage, the database, the servers that hold the database. And all of this is the responsibility for Amazon in this case. So you don't have access to this. And then the second layer, which is your responsibility, is around, what is the security of your products within the cloud. So looking at encryption of the databases, looking at how you encrypt network traffic, what kind of operating systems, if you're using an operating system within the cloud, or what kind of identity and access management, what kind of people have access to your cloud operation, and finally the customer data. So effectively, bringing all this story together is your responsibility within the cloud. Now, I think one of the things I've always found is that when you're coming into any new technology, it's around creating that culture to actually have people understand what it means, and not just within your team, but also within the executive team as well. So one of my pieces of advice is to get in front of the board and the C-suite as much as you can. Start talking about not just cybersecurity in general. I mean, you should be doing that already, but also how this actually fits within the shared responsibility, and try and build confidence within the areas of the board and the C-suite that how this works, and the fact that moving workloads into the cloud are not as high risk as maybe you think from a security perspective. Of course, there's always risk in securing things, but the structure here that these firms create is very robust. I'm just conscious of time, so I want to quickly go through these. So this is DevOps, and this is around cultural philosophies and practices within the team. So some of the things I pulled out here is a cross-functional team. So one of the things around DevOps that enabled this this cultural philosophy was really around developers and operations, and typically there would be a wall between these people, and developers would do one thing, it'd be thrown over the wall, and operations would have to look after it. The cross-functional team is about bringing everyone together within the process, whether it's developers, database, testing, security, or architects together. And actually this helps to deliver a better product because there's no handoffs, and in this case everyone is talking throughout the whole end-to-end life cycle. A couple of other terminology you may have seen, which is continuous delivery. So if developers are coding, they get through a phase where code comes to acceptance testing, And at that point, there was a manual release into production. But prior to this, the reason why it's called continuous, because there is a lot of automation in the background, which gets the code to acceptance testing in a quicker way. And finally, continuous deployment. And this is where everything is automated in production. So, for example, if you're making a small change to a particular piece of payments, it could go through automated testing here. And once that's been passed, then it will automatically go in production. You'll find that a lot of large firms or even technology firms are doing hundreds of deployments to production automatically per day. And the final slide here is the whole team approach. So, one of the areas that's good about working in a startup is that typically everyone is in the same office, and it's quite fortunate. But when you talk about agile and DevOps, typically this is talked about within the technology team. So why not extend that, into the business as well? So, for example, a cross-functional team of not just in terms of technology people, but for example, you could have your finance team, your operations team from the chief operating officer, and also your compliance team. And in this case, if you're developing requirements, say for payments, payments cover such a broad spectrum of the organization. You don't want to get to a point where you do all your work on payments and suddenly you hit compliance and you get things rejected. Bring those guys into the beginning of the conversation for requirements. And that also helps with the testing team as well, because they can develop the test cases from accurate test cases based on the work that's been done with the business. And finally, into acceptance testing. If you've got manual acceptance testing, again, bring that cross-functional team together. And if there's an issue, for example, in finance or in payment operations, you can quickly discuss the impacts within all the other teams as well within the organization. And I know in big firms this is difficult, but if you can aspire that, I think that produces a lot more leaner and effective organization as well.
David, can I ask a question?
Yeah.
Laura here. When you were involved in your startup, how did you make the decision on your kind of sourcing strategy, what you would do in-house, what you would do with partners, and what the trade-off between the complexity of an ecosystem with other partners and doing it yourself was?
Yeah. I mean, I think the first thing is that our procurement guy was always talking that cash is king. So we needed to make sure that any partners that we work with were able to give us a good price. And the reason for that, if you go back to what we said earlier on about AWR, you may have to make a contract with a payment provider or one of these people in the ecosystem. And you may have to make a deal where it says, actually, if we don't get the license, we'll pay you off a certain amount of money so we can walk away. And then after the license is actually procured, you can then, there'll be a different transactional cost for those as well. So the decision for us was that, it was quite simple. We wanted to do as much outsourcing as we could because we wanted to get to time to market quicker and also focus really on building the bank itself, in terms of the people and the products within the organization itself. So it was quite simple in that case. Once we got into those discussions, it would also, it depends on who you work with. A lot of the players in the market, established players, I won't mention names, were not really able to provide us with the technology and the cost that we wanted. Other providers were, a lot of people would come into the meetings and they say we're agile, and that seemed to be quite a big buzzword, but then they had to go back into these large machines, these large procurement organizations where they may have to get various approvals that could take weeks and weeks and that. And, again, that prevented us from going with some of those players as well. But in effect, going back to companies that offered effectively the software as a service model and taking those on a transactional basis was really our focus as well. But also one thing to note is that, in terms of sourcing technology, that was the motive. You can't outsource everything, as you know, from a bank. You have to have some people within the firm from a people perspective as well. But it really came down to, what are the products, what is the technology behind the products that can help us to get to market quickly, who's going to be in the market for a long time, we felt that's going to provide us with those services. But also within the ecosystem, it's about, they're as much, in the game as you are. So, some companies we went to, they wouldn't work with us because we were unknown. And so that was a factor as well. So there was many different layers of how you get through that procurement process. Yeah.
And then did you spend a lot of time, that diagram, the security diagram kind of brings it to life where you've got a lot of services to put around that from an IT and customer service perspective. Did you spend a lot of time agonizing over that as well, or was that easy?
depending on the service, really.
Yeah.
I mean, a lot of these new providers today. I mean, if you go back to that model, what we
Yeah.
would do is that, because a lot of these companies today were based in the cloud themselves. I won't go back too far. They were already within that. They were already using that cloud operating model already. So, if you sit, again, I won't mention the names, but our AML provider was probably the gold standard, if I'm honest. And we sat down with those, went through all their security, their ISO security 20071, and all the other regulatory pieces they had. And actually, they were quite forthcoming in terms of giving us that information, but also their commitment to regular audits, a whole host of operational matters that any bank would have to go through as well.
So they're actually working like that is what you're saying as well.
Yeah.
So, yeah.
Correct. So the biggest challenge was actually on the cloud provider, because they don't like people to come and visit them. And so what they did is they actually have a situation where they do an annual audit with an external provider. And this has been agreed with the regulator. And if you want, they will give you a copy of that audit. Yeah. And that suffices for most people as well. But it's a challenge because they don't know who you are. Yeah. It's obviously a risk for them, for any organisation to work with you. And as I say, some of these ecosystem providers, because they're new themselves, they don't want to stretch themselves into an organisation they feel that hasn't got the confidence to succeed. Yeah, a different model to you would if you're in a big company.
Yeah, my experience of those cloud providers, if they can't give you detail, it's often because it's not there as well. So,
well, it's not there, and they don't want to be service providers in the sense of they provide obviously the cloud service, but they don't provide professional services. So that whole ecosystem has come up around all of the cloud providers, and that's where you have to go, and then you're in another.
It either works or it doesn't, is their view, isn't it?
I'm just going to quickly, because I know we're short on time, embedded finance very quickly here. Effectively, if you look at the ecosystem we talked about earlier on, some of the examples here is Apple Card, for example. Now, Apple Card is, they're actually partnering with Goldman Sachs. Uber Cash, so Uber allows you to use a payment system to load money into a wallet. They're also issuing debit and credit cards to their drivers. And what Uber also doing is that people can be paid real time. So if you're a driver, for example, and you have a fare, potentially in real time or maybe once a day, the fares and their part of that gets put into this debit card within the Uber ecosystem. And then Shopify creating merchant accounts and cards. I mean, I think this is in the US at the moment, but again, taking that ecosystem together within these companies as well. And you may ask, well, what's the difference with white label? It's a similar thing, but obviously white label is quite an old. It's typically based on legacy technology as well, and in order to get onboarded with a white label provider, that can take quite a long time, both in terms of contracts and the operational capabilities as well. And I'll just leave you this last slide because basically I always struggled when we were hiring people. It was difficult to get someone in who could understand what a blank page was. Typically I would interview people and they would always talk about transformation. And I'm like, well, we're not transforming anything. And I had to get out a piece of paper one day for a gentleman and say, look, this is it. We've got to build something. So this quote from the book Creativity Inc. by Amy and Edwin is about building Pixar. I think nicely encapsulates what it's like to build something from scratch. And that's it.
Brilliant. Thanks, David. That was really, really good. Anyone got any more questions at all for David at all?
Yeah, just one quick one, Dave. So you mentioned earlier about the digital bank having to have a certain amount of cash always on hand and be liquid, the 8%.
Yeah.
And I'm just thinking where we are today in our capital constrained times, how is that impacting the growth in fintech? Are they now struggling? Is it still as it was? Can they access the cash that other companies can't? How's COVID impacting them?
I think in general, the investment that's coming in, so there's two things here. First of all, the investment that's coming into fintech is slowed down in some cases. Some companies, if you're looking at fintech from a banking perspective, are still getting investment. There's a couple of big players now who went for an investment round this year and they were successful. Other companies are really going forward to actually turn a profit. I know Starling Bank, for example, have said that they should be making a profit shortly. So that will enable their own, obviously they have internal access to capital through their revenue. But yeah, I mean, it's been a big challenge. I think also a lot more focus on whether or not your business is going to be viable. not just from a from a regulatory standpoint, but also from an investment standpoint as well. But I view, my view is that I think there's still a lot of capital out there. Maybe it's slowed down, maybe the flow has slowed down into the organisation, but I think the actual availability of it is there. It just really depends on, how strong your proposition is. And, those firms that have made it through maybe their first 2 or 3 rounds, and they're now starting to show real promise, and, they're starting to land some really big business contracts. I think they're the ones that are still going to be able to, attract investment.
Thank you. And yeah, and for me, I think it's a sector that is exciting still, because it's, again, challenger banks have only been around, like you said, since 2013. So it's still very new. And I think the world that we're going to go and live in, he's going to cry out for more digital, a more digital world. So it's only, I think, going to enhance and push and drive that thirst for technology within the finance sector, and it's really going to drive it. So, David, thank you very much. Hopefully, everybody on the call had found that really useful and insightful. Just a bit more, and I'll leave this slide up. There's a link to our website. David is he's happy to kind of run some free feedback and workshops and stuff like that around this topic as well. So yeah, thank you very much for joining us this morning. Thank you, David, again. Thank you everybody for participating. And yeah, keep an eye out for our next event. We'll be launching that tomorrow, and that will be taking place kind of early November. So keep an eye out. Thank you very much. Enjoy the rest of your day, and yeah, hopefully speak to you all soon. Thank you all.
Thanks, guys. Chris. Take care.
Bye.
Thank you very much.